Hey everyone, we just got the closing bell for Monday, May 13th. This morning, we were expecting a muted session before the PPI report tomorrow, the CPI report the day after, and a bunch of economic reports throughout the week. And we definitely got the quiet session that we were expecting. Volume is anemic, right around 30 million for today, when the average is 69 and a half, so about 70 million. Even if we get the dark pool action at about 5 or 10 million, it's still going to be about half of the average. So this is even lower than what we've seen all last week. So that is a definite and clear signal that institutions and market participation or participants are for sure waiting for the reports to come up. That means that there is potential for volatility. In fact, I think if we look at VIX, you can see VIX traded up throughout the day. And especially in that last hour or 2 hours, it started really going up. Not because the market was down, it's not. It's actually up 0.01%. So completely flat today, but our VIX went up because of these reports that are coming up. We're expecting price movement to move in a wider range. And if we actually get volume tomorrow, then we can really get a direction in the markets. You can see how similar today's price action looked to Friday. And I said that this morning too, like, oh, today looks pretty much exactly like Friday. So we got almost the exact same price action as well. We started out looking above that 522 level, which led us to believe there was a positive bias in the market and that we could maybe test all-time highs, but that likelihood was low, and it actually moved down. And look how well it honored these purple lines that we've drawn in the past, both today and on Friday. So we came down to the 521 level, bounced around it a few times, then came down to 520 level, bounced off of it, and returned right to the 521 level. So these levels have been really, really good for guidance on where we are moving throughout the day. Now, if you try to day trade this, could you have, yeah, okay, but 2 points on the S&P 500, you might maybe, if you pick on a 0 day to expiration at the money option, you're probably only making like 10 or 15%. And that's a lot of risk to take for 10 or 15% because 0 day to expiration means your option could go to zero by the end of the day. So you're really fighting time decay if you're going for the 0 day to expiration. So if I'm only making maybe 10 or 15% on a 0 day to expiration, if I'm choosing 1 or 2 weeks out, a more safe option, I'm probably making a lot less, maybe not even 5%. So day trading has been very, very boring as well. Not a lot of action, not a lot of money to be made unless you're finding relative strength. You're finding stocks that are way, 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 way stronger or way, 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 way weaker than S&P 500. Today, we did get a little bit of drama. It did not affect the S&P 500 at all because in where we saw it was in GameStop. So GameStop, you see this giant action right here. There's reports that the original person behind, I think his name is Flying Kitty, who was behind the action in the original movement in GameStop, and they made a movie about the entire incident and his participation in it. And he posted something over the weekend, not even any words, just a drawing of someone leaning forward and paying attention. So that got people excited. Trading got halted. Timing was incredible in terms of, you got to think, if I don't know Flying Kitty's background, but he's got a little bit of a shark in him, and he's got a little bit of a really cutthroat institutional trader in him, because the timing of this, and there's actually more than just this example today, was timed perfectly with the Schwab migrations, or TD Ameritrade. Everyone who's on TD Ameritrade got migrated to Schwab. They've been doing it in phases, but this was the largest phase and it was the most people, and chances of that going smoothly are always pretty close to zero. And in fact, there was a lot of drama this morning with a lot of people not being able to access their accounts, not being able to trade in their accounts, not being able to see their accounts. And Schwab was unable to keep up with the volume of service requests. So there's a lot of people who were not able to trade in their accounts today. And this is the danger of brokers selling data to institutions. There's most brokers, especially the free brokers like Robinhood, Webull, things like this. They sell their data, their orders that they receive from their clients and the positions that their clients have. They sell that data to institutions. So someone figured out that there was a lot of Schwab or TD Ameritrade traders who had a short position in GameStop. They also figured out the same thing in PDD. PDD was not nearly as dramatic, but if we look at an intraday basis, you can see that it was actually a lot more dramatic. So PDD. In the morning, you see that giant spike up and then giant spike upward at the beginning, and then the sell-off. So this was $18 million bet right here that came in right at the open. 18 million, some institutional trader in a single order put in $18 million worth of call orders and drove this up, knowing that there was a lot of people who are either short PDD or short, well, in this case, short PDD, so that all those people were unable to protect themselves or sell out of their positions. And this trade went completely against them. And that trader made out like a bandit. So a lot of cutthroat action happening in Wall Street. And this is why I don't trade meme stocks, or if I'm going to do it, I would do it with very small money. I wouldn't be putting any significant amount in anything like a GameStop. PDD is not a meme stock, but you can see is very, very mild action on a daily basis. Definitely a lot more teeth in GameStop, but PDD, let's see, it was just that one trader with 18 million coming in all at once. So moral of the story is try to avoid brokers who sell your data because it could go really against you if you happen to have holdings that are in common with many other people who are using that platform. So especially if you're trading because of news, or if you're trading because of a meme, or you're trading because of a chat room, or you're trading because of whatever, Jim Cramer or whatever, all those are very visible trades, and a lot of people are going to follow you in that trade, meaning everyone's going to have the same position. Now that can work for you because you have the herd mentality, like going in all into the same stock that could drive a price up or down. But if an institution catches wind of what you're doing, they could really screw you guys over. So just try to come up with your own system and your own way of developing trade ideas, and don't rely on things like news or memes, and use a broker that is ethical and that doesn't sell their data. That they're hard to find. So one that doesn't rely on selling on their data. So those are your major brokerages who charge fees and commissions. They don't rely on selling their data. They do sell their data. Most of them still do sell their data, but that is not the majority of their business. It's just like a little tiny side thing. So they're not selling a huge amount of it. But a broker like Robinhood, they're 100% dependent on selling their data. I think when they were called out and they had to reveal their percentage of revenue that came from selling their data, I think it was 97 or 99.7%, if I remember the number correctly. It was either one of those two. The last number was a 7, and the first number was a 9. It's 97 or 99.7% of their entire revenue was made up of selling data to institutions. So that is really harmful for Robinhood traders. In any case, we got overall in the S&P 500, we got a very muted session, very, 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 very low volume. We ended up completely flat on the day at 0.01%. So really, there's not too much to talk about. It's interesting to note that VIX is rising. You can see that little gap up and trade upwards today. Going into the PPI, that just means we have uncertainty. That just means that after the CPI, we might even see this go even higher. once the CPI data comes out. But unless there's completely weird and wild data and we have these huge misses, then most likely we're going to trade back down in this range. If we have surprises and that are negative, meaning that the market would react negatively to them, then we could be seeing 15, 16, maybe even depending on how bad it is, we could even shoot into the 20s. But for now, if we make the assumption that the numbers are going to come in near consensus, then this would come back down. So maybe a strangle on VIX, meaning that, hey, there might be a big movement downward or a big movement upward. Of course, the potential for the upward movement is much higher for the downward movement because it didn't really move that much. So you'd have to carefully evaluate if the cost of the strangle would be worth the potential move to, especially to the downside. And my feeling is it's probably not, because this is relatively small movement in the scheme of how much VIX can move. In any case, the VIX is indicating that there is going to be volatility and uncertainty going into these reports. So the best strategy for us, the safest strategy, so we always want to preserve our capital. We want to make sure that we have capital to trade the following day, to capital that can help us make money rather than make gambles. So the best thing to do is sit on the sidelines right now. There are, maybe we could take little stabs at of very small percentages of our portfolios here and there, just to see if we can capture some big moves in case these CPI and PPI reports come in super hot. But, you know, at the end of the day, is that going to make or break your portfolio? If I put $100 on a movement and I make 3 or 4x, that's a few $100s. Is that significant? Well, depending on the size of your portfolio, maybe. If you only have $1,000, then that's significant. That's 30, 40% of your portfolio, but you just risk 10% of your portfolio on it. So it doesn't make a lot of sense to do it. So if I had a $10,000 portfolio and I risk 1% and I make 3 or 4%, then it becomes a lot less meaningful. So for the most part, the best thing to do right now is let's just wait for the risk to die down. The risk in the market is great. When you have great risk, you also have great opportunity, but only if you have safe ways of capturing that opportunity. And right now, I'm not seeing a safe way of capturing it. Everything is, equal risk, equal opportunity. You want the edge. You want the odds tipped in your favor so that your reward is greater than your risk. And right now, that's in this current environment, it's just 50-50. We're near all-time highs. We could break up or we could break down. We've broken out of this MA50, so we're kind of in this no man's land between the MA50 and the all-time high. So really, we're just looking at bouncing back and forth inside of this region. And there's no, other than these reports, there's no stimulus to give us a directionality in the market. So the reports may send us in a direction, so just by themselves, meaning that, hey, I don't have a good way of evaluating the reliability of the reports. The professionals don't even. They come in at consensus, maybe they get it right. If they get it right, then nothing happens in the market, which means that if any investment that I make in a single option strategy, well, it depends on directionality, it's likely to not make any money. But if we get a surprise, it's got to be a big surprise to upside or downside. And we don't have a good way of predicting if it's going to be a surprise or not. And if there is going to be a surprise, if it's going to be up or down. And so all of those things mean we have no edge and our risk to reward is not in our favor. So only if it was in our favor would we be able to make a move. And right now it's not. So we're just going to sit on our hands. Probably going to be true after tomorrow as well, because we'll have the PPI, but we'll still have the CPI. So we'll get a little bit more certainty after tomorrow, or we could be so far off on the PPI that we have complete uncertainty on the CPI. So again, we have uncertainty, and that's why the VIX play that I just talked about it's probably not worth your time, because it could be down. Don't know. It's just the potential for it to move up. There's a lot, the room that it could move up is a lot more than the room that it can move down. So we're just going to leave it here. We're just waiting for those reports to come out so that we can have a better idea. We have higher conviction in a move in one direction or other. And then until we get that, we're just going to sit on our hands. So relatively short video today. We're really just waiting for that PPI to come out. And then we'll see tomorrow if that's enough information to give us an edge. And if not, then we'll be sitting on our hands again. So that's it. Have a wonderful rest of your day, and I'll see you tomorrow morning.